Good afternoon. I'm Joyce Klein. I'm director of the Aspen Institute's Business Ownership Initiative within our Economic Opportunities Program. And it's my pleasure to welcome you to today's event, Delivering Credit to Entrepreneurs of Color Impacted by COVID-19, Why Community Financial Institutions Are Essential. This conversation is part of the Economic Opportunity Program's ongoing Opportunity America discussion series. And that series explores the changing landscape of economic opportunity in the US and its implications for individuals, families, and communities across the country. And I want to note our deep appreciation to the Ford Foundation, Prudential Financial, the Walmart Foundation, the Cerdna Foundation, and the MasterCard Center for Inclusive Growth for their support for the Opportunity America discussion series. At the Economic Opportunities Program, we focus on advancing strategies, policies, and ideas to help working people and small businesses to thrive. And I think, as we all know all too well, small businesses and working people are facing extraordinary challenges today, with millions of small businesses struggling with declining revenues and concerns about needing to close for good, with workers experiencing job losses, now made more difficult by the expiration of expanded UI benefits, or if workers are still working, balancing caregiving and work, which is made more difficult as daycares are closed and students are expected to learn from home. And at the Economic Opportunities Program, we recognize that for too long, race, gender, ethnicity, and place have played an outsized role in who's included in economic opportunity in the US and who's shut out. And the topic we're going to be discussing today is deeply connected to the work that my program, the Business Ownership Initiative, has been doing for several years to explore the particular challenges that are faced by entrepreneurs of color in the United States and the role of community development financial institutions, or CDFIs, in getting them access to resources, particularly to capital and credit. And since the pandemic hit, our team at the Business Ownership Initiative has been sort of really doubling down even more on our work with CDFIs, as we call them, funders and policymakers, including some of the panelists who've joined us for today's discussion, to identify the policies and investments that are needed to really reach entrepreneurs of color. And we think this is an essential topic to be tackling when we're really at the confluence of both an unprecedented economic downturn and a renewed and much needed call for racial equity and justice in our country. And you know, if you look at the quarterly GDP figures that were released last week, you see what's happening to our economy at a more macro level. At the firm level, I just want to call out, there's been a lot of research and writing about this, but the Federal Reserve Bank of New York just today released a brief that shares some of the key reasons why this pandemic has struck so deeply, in particular at Black-owned firms and communities. So I'm going to get us into our conversation, but first I want to quickly review our technology. We're thrilled with the participation in today's event. We had more than 1,000 folks register to join us. So we are in webinar format, which means that all attendees are muted, but we do welcome your questions. So please use the Q&A box on the bottom of the Zoom window to share any questions or comments you have. Thank you to the many of you who submitted questions in advance when you registered. We're going to try to get to as many questions as we can. Probably not all, given how many people have signed up, but as many as we can. We encourage you to tweet about the conversation. Our hashtag is #TalkOpportunity. If you have any technical issues during the conversation today, you can chat with Tony Mastria on our team using the chat feature, or you can email us at eop.program@aspeninstitute.org. I will note the webinar is being recorded and it will be shared via email and it will be posted on our website, and we'll push that information out to you after the event today. Just briefly, in terms of what the agenda looks like, we'll have a moderated discussion with our panelists led by Helene Olin, who's an opinion writer with the Washington Post. Then Helene's going to pose some of the questions to our panelists, drawing on the questions that many of you submitted when you registered. So thanks again for sharing those. We'll also draw on questions you can submit during the course of the conversation through the Q&A feature on Zoom. And please note, you can upvote a question if you see one that's already been asked that you'd particularly like our panelists to address. So with that, I'm going to go ahead. I'm going to cue our panelists to turn on their cameras, and I'm going to turn it over to our moderator, Helene Olin. As I mentioned, Helene's an opinion writer with the Washington Post. She's also the senior managing editor for Public Seminar at the New School. Helene, thanks again for joining us to moderate today. I know you're doing this during your vacation, so we deeply appreciate it.
Well, I consider this an insanely important topic, so I was thrilled when you asked me.
Great.
So anyway, good afternoon, everyone, or good morning, as we say on the West Coast here. I'm Helene Olin, as Joyce just said, of the Washington Post and the News School, and I am thrilled to join Aspen for an incredibly important group of CEOs and companies have released a letter begging Congress to small businesses, calling what's now on offer beyond adequate. Revealed that 2,000 businesses listed on its platform that temporarily closed.
I think that we might have temporarily lost Helene.
Thanks, Michael. I'm gonna go. Yeah, this is Joyce. I'm gonna come back on again. Helene, we're losing you, so I'm gonna ask you if you can dial in by phone and speak up when you hear from us, or when you're back with us, and I'll turn it back over to you. Let me just do a brief intro of our panelists, if that's okay. Just so folks know, you had bios in the announcement, and so, but let me just tell you who's with us. We have Bill Bynum. Bill, if you want to give a wave, who is CEO with Hope, based in Jackson, Mississippi, a large CDFI credit union. Bill, we're also thrilled that Bill's a member of the Board of Trustees with the Aspen Institute and a longtime partner of ours. Also, Michael Barr. Michael can wave. Michael has a lot of titles at the University of Michigan. I'm going to share one, the Joan and Sanford Weill Dean of Public Policy at the Ford School of Public Policy at the University of Michigan. And also our final panelist is Nicole Jordan Reed. Nicole is the owner and founder of Nicole Jordan Catering, catering company based in Chicago, Illinois. And Nicole, as she'll share later, was connected to us by Axion in Chicago, which is a community development financial institution that does small and micro business lending in Chicago, and is a close partner of ours. So it doesn't seem like I see Helene back. So I'm just gonna roll and let Helene jump in when she gets there. So the first thing we wanted to do is just get to know you all as panelists a little bit and how you connect to this topic. So Nicole, we'll start with you. Tell us about your business, why and when you started it, and just briefly, because I know there's a lot to share here, but what has the impact of COVID been on your business?
So I own, as has been stated, Nicole Jordan Catering here in Chicago, and we're a full-service catering company servicing the Chicagoland area. And we've been in business about 4.5 years. Prior to that, I had a 20-year career in corporate America and consulting, doing a myriad of things, but made the transition from that to catering and being an entrepreneur, which was really my passion, and doing that in the food service space. With the pandemic that is upon us and the start of COVID, it definitely stopped us in our tracks. We had a complete drying up of our business. In March, I mean, literally over a period of a week and a half, leading up to like mid-March, events were canceled from that point until summer. Because people are gathering, and we do, and a lot of our business was large events or conferences, working with a lot of nonprofits. So we are delivering food to people, and with that, it pretty much blindsided us in that way. So we had to really regroup and start to think about how we approach business. Because it wasn't an option to not be here, but how we can, regroup.
Great. Well, thank you. We'll dig more into what that experience has been and how you've been really thinking about your business going forward. So, but next I'm gonna turn it to Bill. Bill, you, as I mentioned, you lead Hope Enterprises, Community Development Credit Union, which is one kind of community development financial institution. So tell us a little bit about Hope and its work, and maybe a little bit about your journey, how you landed at Hope.
Oh, thanks, Joyce, and thanks for organizing this conversation. It's really important. I don't think we can talk enough about the communities that are disproportionately being affected and left behind during this, what I've heard referred to, I think, appropriately as a triple crisis. First, there was a health crisis, an economic crisis, and now you got the racial crisis that I think are very much tied together. You mentioned I work at Hope. We are in a region of the country that is synonymous with, unfortunately, with the deep entrenched poverty, a region where, a third of the counties in the country that have had over 20% poverty for half a century are in Louisiana, Mississippi, and Alabama, which are three of the states we work in, along with Arkansas and Tennessee. And it's not a coincidence that poverty is also in a region where we have some of the highest percentages of Black populations in the country. And so we were created, I stopped talking about organizations so much as a financial institution, as a community development financial institution, which we are, and we are proud to be one, but that's a tool to address these disparities that have limited people's ability to climb the economic ladder, whether it's health outcomes, education outcomes, access to healthy produce, jobs, affordable quality housing. So everything that people need to climb the economic ladder, they're lacking in this part of the region. And at some point, you need capital, you need financial tools to address those issues, and that's the piece of the puzzle we try to bring to the party. We have a loan fund that started back in the mid-90s with $1.5 million. We found out quickly that was not enough to transform the economy of the Delta, and so we looked at the banking system, and so eventually we created, we merged with a credit union and started Hope Credit Union, which leverages financial, federally insured deposits and uses that as our primary source of liquidity, and also means to get people into the financial system. And so we cobble together tools, capital work, however we can, and use every tool in the alphabet soup of federal and state programs, philanthropy, and try to bring that into a region and get it into the hands of people where wealth has been extracted for generations.
Great. Thank you, Bill. Thanks for joining us today. And finally, I'm going to let Michael introduce himself. Michael, I mentioned you're currently the Dean of the Ford School at University of Michigan, and you've been involved there and work with entrepreneurs of color in Detroit. But your work with CDFIs and with issues of finance and law and policy go back to the Clinton administration, at least. That's where we met. Can you tell us about how your work has touched this issue that we're talking about today?
Sure. Thanks very much, Joyce, for having me here today. And it's just great to be on the panel with you and Bill and Nicole. And as you mentioned, I got started in this sector working on these issues about 25 years ago. I was in the Clinton administration working on building the Treasury Department's Community Development Financial Institution Fund, CDFI fund, and other access to capital initiatives, anti-predatory lending initiatives to strengthen the Community Reinvestment Act, and then to build what became the New Markets Initiative and the New Markets Tax Credit for investing in low-income communities. And had a chance to visit with Bill in Clarksdale, Mississippi at a furniture factory there as President Clinton and I and others were running around the country trying to get the New Markets Tax Credit enacted. And then I continued that work at the University of Michigan, where I've been doing research on access to finance, access to capital for low-income communities. And then I went back into the Treasury Department under President Obama. And one of the issues that I worked on was access to capital and community development and housing finance issues, as well as the Dodd-Frank Act and the Consumer Financial Protection Bureau. We were also involved at that time in launching an emergency program for CDFIs hit by the financial crisis in 2008. And so that experience certainly has come back now. And then while I'm at the University of Michigan, I've been doing a lot of work in Detroit for many, many years. And most recently, worked with a former student at the Kellogg Foundation, James Walls, and with Ray Waters at the Detroit Development Fund to set up a Entrepreneurs of Color Fund that Ray runs in Detroit that serves minority businesses in Detroit. And then at the University of Michigan, we launched a program called the Detroit Neighborhood Entrepreneurs Project. And that project brings together students and faculty from the business school, the law school, the policy school, and our School of Art and Design to help minority-based, minority-owned businesses in Detroit's neighborhoods with access to the kinds of skills and networks they need to be successful. So in the current crisis, that program, DNEP, Detroit Neighborhood Entrepreneurs Project, has been working with businesses first to help them shut down properly during the shutdown, and then to move online, and now eventually to reopen in a safe way. So it's been a hard road for a lot of the businesses we work with.
Great. So lots of perspectives folks can hear. And fortunately, Helene's back with us. So I'm going to go quiet again. Helene, we just went through the introductions of the members, got to know them a little bit, and I'll turn it back to you.
Helene, you may be on mute.
Yeah, you are.
Okay, so can everybody hear me now?
Nope, you're a little bit feedbacky.
Okay, is that better? Wait. Is that better?
Yes.
Yes.
Is that better?
Yep.
Okay. All right, finally. Okay. Anyway, I'm glad to be back. Nicole, I want to give my first question over to you. You applied for a PPP loan and didn't or grant and didn't receive one. Can you talk to us a bit about the process and who you ultimately did receive funding from? Because I know you received funding from other sources.
Yes, correct. So yes, I did apply for the PPP twice and did not get it. The process initially, I was applying or planning to apply through my current bank where I do all of my commercial banking. And that was a little bit of a challenge. There was a lag there. So from the time of the initial notification that we could start applying to actually getting contacted to move forward with the application, there was a little bit of a lag on the part of the bank. And so I opted to not go with my financial institution and leveraged another path due to my being in, I participated in the Goldman Sachs 10,000 Small Business Program in 2018. And so they made an offer to alumni to work with a lender that they had partnered with during this time for the PPP. And so I did that, and come to find out I was not eligible and was rejected based on a couple of things. So as a business, I am an
And what
LLC.
were you, I don't want to interrupt, but what did they say were the reason for you not being eligible? You are an entrepreneur, you should be eligible, right?
Yes, so that's correct. So at the time, I when the application went in, I used my 2018 filings, which I had not submitted, had not filed my 2019 taxes for the business at that point in March, and early in mid-March, and so, or late March. And because of that, in that year, I actually took a loss in the business. And so because of the numbers that they're looking for on your like Schedule C and all of that with your filings, the calculation is 2.5. And so because it was 2.5 on the negative, they were no. The answer was no. Long story short. And I contract workers. So it's just me in terms of the filing on the PPP as it relates to an employee. But because of that Schedule C and that the taking the loss, it pretty much stopped it right in its tracks. And so that pretty much ended the PPP, which was a little disheartening. However, I was able to apply for the EDL with the SBA and receive the advance as well as a loan there, and then was successful with locally with the city of Chicago and the Chicago Small Business Resiliency Fund that was presented for small businesses. I had success there, and then received a couple of grants from private donor and a family foundation, not a philanthropic foundation here in the city.
And how did you find
it
out
actually
about,
worked out.
Okay, how did you find out about all those opportunities? Because one of the things we hear repeatedly from small business owners like yourself is they don't even know where to turn, right? They get rejected from PPP and then they throw up their hands because they don't even know there are other resources out there. Can you just talk about that for one moment before I turn to the other panelists?
Yes. Well, I'm a heavy networker, but I, have relationships with, and participate in things with the city of Chicago through our business office that VACP, Business Affairs and Consumer Protection here in Chicago, that administers licenses, and they do a lot of programming. So I keep abreast of all the things that are going on there. So like the Chicago Small Business Resiliency Fund, information is disseminated, I'm seeing that. But also I do a lot of work, or I connect a lot with some of our organizations here, like Axion Chicago. I've received coaching. I've participated in a program, an entrepreneurial program with them. I've networked, leveraged heavily my own personal and professional networks, and got connections to organizations. But I am always, and I'm a researcher. So I look up, and I look up everything, and I'm always looking for something as it relates to my business growth, professional development. And so I'm actively keeping my ear and eyes open, as well as talking to people. I talk to other entrepreneurs who are also in a similar situation, and they share, and we share with each other.
Okay, and one, I'll ask my next question next time. Bill, you lead HOPE, a community development credit union. Can you tell us a bit about the work and your journey to get there?
Yeah, I shared a little bit about what we do earlier, but I think it's really important, and a lot of what I think I like to share is piggybacks on Nicole's story. It's just really amazing how so many other entrepreneurs found themselves in a very similar position, which is why CDFIs like HOPE and so many other community development financial institutions and minority lending institutions across the country are so important, because we are we are wired to fill the gaps that exist in the traditional financial system. We were created, CDFIs, because there are so many gaps where traditional banks don't serve. Whether it's because of redlining, because of their business model just doesn't align, because they're profit maximizing, but for various reasons, that leaves many entrepreneurs of color, rural entrepreneurs, low-income people, women, people who don't fit the box on the outside looking in. So, Nicole, it probably doesn't help when they say misery loves company, it's still misery. But you had a whole lot of entrepreneurs that found themselves in the very same position that you did, whether they had a banking relationship and applied for a PPP loan and found that they were at the end of the line or the back of the bus or not even on the bus, while the larger, more profitable, better relationships, had strong relationships with the lender and the bank, were able to get in, particularly in that first round of the PPP program. And so we were very glad to see that the policymakers ultimately listened to a wide range of advocates from across the country, CDFIs, small businesses, policymakers in local communities who said, look, our business is getting left behind. And ultimately, the Treasury Department, SBA, and Congress opened up the program and allowed CDFIs to participate, which is so important because a program that is designed to help small businesses should take advantage of those frontline institutions, or those first responders in the most distressed communities, which are more often than not are going to be CDFIs, are going to be minority-led or owned financial institutions. When you look at minority institutions, for example, 6 of the 10 people in communities that we have banks are more likely are going to be Black or people of color, compared to 6 out of 100 in a non-Black owned or Black-led financial institutions. Just so by virtue of proximity, we're going to be more likely to serve those communities who are more likely to be undercapitalized and to not have the relationship with the mainstream financial institutions that allow them to get access to the PPP program. And quite honestly, just banking and financing on a normal basis. You know, the disparities in terms of access to capital are dramatic. And when you have a bank in your community, you're more likely to get a mortgage loan or a business loan or to be banked. It's just logical, but since the financial crisis, banks have closed in record numbers in those low-income communities, which is disproportionately going to be Black and brown communities.
Okay. Michael, a quick question for you. As someone with a national and policy perspective, how surprised were you by what happened with the ability of entrepreneurs of color to access the PPP or not access the PPP, as the case may be, and other federal relief programs? And how does this relate to the challenges of entrepreneurs of color historically face in getting access to credit?
Well, I agree with what Bill and Nicole have said about the difficulties that African-American businesses face and other minority businesses face in this environment. And it was predictable. I mean, I think that the administration made a mistake in the structure of the program, and they should have had first in their minds right from the start, serving really the hardest hit businesses, the really small businesses in neighborhoods, minority-owned businesses. And they could have and should have structured the program to make sure the dollars went out the door first to the institutions, the small businesses, the entrepreneurs who needed it the most. And minority entrepreneurs are often not able to access this full range of resources. Nicole, I think, is an exception to the rule of many minority businesses who don't have the kind of networks that Nicole described. They don't have the full set of background and skills that Nicole described, and they don't have the banking relationships. And that being cut off in so many ways from banks and from these networks is makes it really hard for minority-owned firms. And that's why CDFIs and minority-owned banks play such a critical role for minority-owned businesses in distressed neighborhoods in particular, but really all over the country. CDFIs have a track record of serving minority entrepreneurs. They are in the communities they're serving, and they're able to do a much better job often. But even for the institutions that, for the banks, that had access to this lending, if the program had been set up so that they were needed to prioritize minority-owned businesses, we would have seen a much different program. And I think it's just a tragic mistake. Now, there are all kinds of basic problems with the program too, we can talk about in the details, that make it hard for small businesses to use, the PPP program in particular. But that basic choice about who to serve first, I think, is fundamental.
I would agree with that. Nicole, question for you. You've been working with a local CDFI, Axion in Chicago. What is the experience of working with them different? How is it different from a bank or other lending organization? And have you ever received loans from more traditional lending organizations in the past? So, you know, if you can compare the experience for us.
So, with my business, I self-funded my business starting out.
Which is what most entrepreneurs do. Right.
Yes, everything. And so the paths that I took to get funding outside of my own pool of funds, I did do some crowdfunding through Kiva in 2017. Did that as we were expanding, and which was a really great experience. Not your traditional, but it was an interest-free loan. You solicited donor support, and it was very helpful at that time.
Had you
And
ever?
I had not.
I'm sorry. I mean,
Yes,
have you
I'm
ever
sorry.
gone through a bank though? I mean, have you ever gotten money?
So no banks.
No banks.
In
Have
the
you tried?
traditional path.
Okay. Had you
Uh,
tried prior to this? I mean, in the pre-COVID days. I mean.
Yes, which was a challenge in getting, because I was looking at getting a line of credit.
And can you talk about that a bit?
It was, the bank that I bank with, and it was pretty much no. Going through submitting, they had all my information, and I totally got rejected.
And did they give you a reason? What was their reason?
So I know I've leveraged a lot of credit, and so that was probably a negative in for me. But my credit overall is good, relatively speaking for a young business. But they, I felt like the criteria was, I mean, they have their criteria, but it felt a little more stringent than, kind of the help that I needed, even having decent credit, but still leveraging some, having some debt, those kind of things. But I have steady income, and had with the business, and there was definitely historical information to that.
And you had to
in terms
pay.
of revenue.
I'm sorry, I'm doing the New York thing where I talk over people, and I'm so sorry. Did you have to pay higher interest rates to get loans because you weren't going through traditional bank?
So I did. So I did leverage some other alternatives in terms of like the Cabbages of the world, which so and their rates are astronomical. But you have to be very, very intentional and strategic about how you utilize those types of funds, because the return on the payback is a lot different. It's structured differently. The interest is very high. And if you are not getting, as a business, if you have lulls or any hiccups, it could definitely adversely affect you. It's not the best route, but it's fast. And so when I did need additional funds, it was fast. But going forward, I have looked at, and actually have been preparing myself to work with a CDFI Axiom to submit for a loan. But then the pandemic happened, and I have been getting some things in order for that. I have been preparing like financials for that.
Okay, and one last question before I go to the next panelist. And I should say to everybody, I used to for years be the personal finance writer for Inc. So I give Nicole like 5 hours of my time right now. But the one last question, which is, how is the experience of working with a CDFI different than the banks and these other alternative lenders?
Well, working with a CDFI gives you a couple of other advantages. You get to develop the personal relationship, number one, a lot differently than with your bank. Two, there are other wrapper services that help support you so that you can be positioned to successfully get through the loan process. So that, it's not just, I'm applying to the loan to the CDFI, but there are also workshops and programs and resources that can help you look at, okay, am I able to get this? What do I need to do? Where are my gaps? How do I need to plan for this? And to start to think about those things and then act on them so that you can get through the process, which is much different than just, the bank, right? It's either you have it or you don't, and pretty much, in the long and short of things. The CDFI, because of the services and support that is available, gives you a different positioning.
Okay, that's terrific. And Bill, can you talk about what HOPE does And what allows you as an organization, as a CDFI, to allow to make loans to entrepreneurs of color like Nicole that, the banks, don't want to help and, are otherwise left to the mercy of, alternative lenders, charging much higher interest rates?
Banking used to be a very hands-on, personal process where you actually sit down with Nicole and you have a conversation with her and other entrepreneurs like her. You realize how brilliant they are to be able to cobble together resources and to get to a point where they can actually start to generate revenue and find a market and a niche despite all the obstacles that have been put in front of them. And so, that is someone you want to bet on and put them in a position to actually stabilize and grow and to nurture more Nicoles and be a role model for more Nicoles in the communities where they live. But unfortunately,
what lets you do that? What allows you to do that as an organization so that the banks and the alternative lenders don't have? I mean, is there something in your structure?
First and foremost, we don't treat people like it's not a formula. We don't put people into a computer and churn them out and you're a yes or a no. It's understanding their financial position, what they're trying to do. We are personal bankers. We are private bankers for underserved people in places. Folks like many of us, I didn't know what a personal private banker was at one point, but they actually will sit down with wealthy people and help them solve their financial problems. No one needs that more than people of color, low wealth people. And so we step in and fill that gap, and we have a conversation about what your financial position is, what you can afford. We don't put them in a financial relationship that is predatory and actually puts them into a debt trap. And so that's certainly our approach, and how we engage the entrepreneur is one thing. And so many people of color will even people of means will often go to a petty lender because they are more likely to get a yes. No one wants to be rejected. And so it's just a matter of being treated with dignity and respect. And so you go to where you feel like you'll be treated like a person and valued.
And is there something, I don't mean to interrupt, is there something in the way you're evaluating people that is, somehow more culturally sensitive? And does that translate into lower default rates or higher default rates or the same default rates? How does that work exactly?
We go to toe-to-toe with any financial institution in the country in terms of our performance. Our delinquencies may be higher because, quite honestly, the people we serve have less of a safety net. The wealth disparities, 10 to 1, 12 to 1, black-white wealth gap, 1 to 100 black families with children compared to white families with children. And so you don't have those kind of wealth disparities and not get blown further when the winds get high. And so you're going to have some ups and downs and volatility that more people who are more affluent don't have. But we work with them. We were more flexible. A third of our portfolio, we've given some deferments or forbearance and flexibility during this crisis because we know that they have been hit harder and they have less of a safety net. And so we want to give them a lifeline to be able to get back on their feet. But we are also located in these communities. 80% of our offices are in majority minority census tracts or neighborhoods, or in low income, low wealth census tracts. 60 to 70% of our personnel and our management are people of color, and we live in these communities. We have to go to church, go to restaurants where you could go to a restaurant and interact with these people on a regular basis, and there's an accountability there. And I think one of the most important things about our structure, as you mentioned, we talked about, we're a credit union. We are owned by the people who are members of our credit union. And so we don't exist to maximize profit for a few shareholders. Our profits are recycled in order to provide lower rates, more access to capital.
Okay,
for
so that's,
people who need
okay.
it.
Thank you for that. Okay, so Michael, that brings me to you. You were very involved very early in from the federal government when they first created the CDFI fund, which provides important capital to these organizations. Why are they needed? Can you elaborate a little bit more on this? Why do the traditional banks not want to help minorities of color, help communities of color as much as they could or probably should?
Well, I think Bill's example is an important one, and the operations that Bill runs in the Mississippi Delta and surrounding region are really phenomenal at taking that local knowledge and applying really high quality financial analytics with that local knowledge to figure out how to make profitable loans. And it's often the case that CDFIs can serve communities or choose to serve communities that banks or sometimes the online sector doesn't choose to serve. And certainly at rates that are much more affordable because they're driven by their mission. But sometimes when things are working really right, the CDFIs can show the path, show how to do this in a profitable way, show how to do this in a way that that respects the borrowers that the CDFIs are serving, and then others can come along and also join. And so when things are working right, CDFIs can lay the groundwork for more active involvement, often as partners with banks and sometimes with online lenders.
Okay, quick question here to interrupt you again. What percentage of loan capital, going to entrepreneurs of color comes from traditional banks versus CDFIs? Do you know?
I don't have that figure in my head. Bill might know, but predominantly for entrepreneurs of color, as Nicole was describing before, the primary method of financing is from their own funds, which are lower levels for minorities than for whites by a lot. So you're tapping into a resource that is already lower, and then friends and family, and then personal credit card. And it takes actually quite a while before you get on that list to getting a bank loan. It's very hard for minority entrepreneurs, particularly just starting out in the first few years of operation, but even long term, if they're operating a business like Nicole's business, it is extremely hard to get access to a bank loan, even after you've been in business for quite a while. And that's why organizations like CDFIs can step in. There's a wonderful partnership, I was going to say, between Opportunity Fund, which is a CDFI, and Lending Club, which is an online lender. And they actually work together to do small business lending. They take the expertise of Lending Club's back office operations and the front end mission and local knowledge of Opportunity Fund to do small business lending. So it's possible for CDFIs to make a ton of progress here, but also possible for CDFIs to partner with banks and with other lenders to expand the pool of capital available in minority communities.
Right. Bill, I've got a question.
Helene, let me jump in on Michael's
that's great.
Michael. 1% of SBA lending in the state of Arkansas went to Black entrepreneurs. 1%. 80+% of our PPP loans went to entrepreneurs of color. That's just a small sample size, but it's unfortunately more indicative of the disparities in lending to entrepreneurs of color among CDFIs compared to traditional sources of capital.
And you saw that in the New York Fed report that was released today as well, that overwhelmingly the PPP loans are not going to minority entrepreneurs. One of the questions in the chat box is this related to loan size? And it for sure is. I mean, really small businesses need smaller loans, and the fixed costs of making loans are, don't go away. But it's not only that. I mean, there are mission and choices that institutions make, and it would have been possible, as we were discussing before in the PPP example, for banks to be told, here's the priority of lending. You need to lend to really small businesses first, And then we can talk about bigger businesses over time. And they could have set up the program so small loans got funded first, which is a really nice approximation for a small business. And they didn't do that. And I think it would have made a big difference.
Quick question for Nicole here, because I know you were in the corporate setting for a long time, so you might have known CDFIs. I don't know the answer to this, but did you only discover them during the COVID crisis? Did you know about them before? And had you thought of you were thinking of going to them before, but how did you find out about them? Like, how did this all come about? How did you discover them, basically?
Well, I already had a relationship with CDFI. Before COVID, for a while.
Right. How did you find out about them, though?
So, through networking. First CDFI I found out about, which is another one here in Chicago. I found out through literally in my network talking about me starting my business. Someone's like, "Oh, have you heard of XYZ?" And I'm like, "Oh, no, I haven't. Oh, check into that. Oh, I know someone over there." And so I started to look that up, and then started to look up CDFIs even further, and found more information, learned about Axion, and then subsequently, over time, got introduced there. And so it was a matter of, speaking up and, reach and researching. But I actually wanted to make another point too, in terms of
go ahead.
One quick thing around challenges in terms of getting loans, and coming from as a small business. And even though even with my background, still having the challenge, as small businesses, sometimes what also challenges us is our preparedness in certain areas. So, when this pandemic hit, from a financials, are your books in order? Is your accounting in order? How are you managing those things? And how are you able to show a bank or show a CDFI what you have in terms of viability as someone to receive a loan? And, that's something that is also critical to address. And I think that, there are some smaller, some banks that are looking at the totality of the person and business. But I think, like I said, with the CDFI, because there's other programming, you have an opportunity to pull all the things together in order to be a viable candidate, not just even in a loan through a CDFI, but then now priming yourself to be a strong candidate in the traditional banking sense.
Right. And Bill, you had talked a bit before about, being in the communities, and that's how people found out, about you. But have you found that it's hard to get the word out sometimes, that people just go to other lenders first because they literally don't know you're there?
Unfortunately, many of the communities where we serve, we work, they are bank deserts. So there's no traditional bank that is providing access to capital. In many rural communities, even in many cities, in many Black neighborhoods, the banks have closed. And so the predatory financial service providers are more likely going to be in those neighborhoods than not. And so, and kind of honestly, CDFIs, relative to the need in these communities, demand are very small. So we don't have the marketing budget. So we do a lot of grassroots. We do a lot of networking with other nonprofits, and over time we've become a more clearly important part of the financial system. But we are more often than not we're the R&D arm of the financial system. We show what can be done and how to make loans in communities that are underserved, and we try to scale that up. Nicole mentioned the 10,000 Small Business Program. That's initiated by Goldman Sachs. We work with Goldman Sachs after the Hurricane Katrina to bring capital into the Gulf Coast and into New Orleans. Wells Fargo has started to, and other banks have started to put their PPP fees into CDFIs to invest in places where they are not. And so Netflix made a $10 million deposit into our credit union to import capital into these well-starved communities. And so as more mainstream corporations and banks start to invest in CDFIs, people know more that we are a viable solution. And so the word starts to get out, but just in terms of marketing, it's a slog, getting the word out and countering the existing barriers to financial services is significant and has to be overcome, not just by CDFIs, but by public policy that really takes serious opening up access to capital, making it more affordable, and protecting consumers from these predators. Once we get capital into these communities, you can't be stripped away by the vultures that are preying on those most vulnerable in society.
Let me just pick up on that point from Bill, if I might, just for a second, because I think that last point is so critical. You know, if you think about the consumer protection world, we don't have a perfect set of laws in that area by any means, but at least we have the basic idea. We have a Consumer Financial Protection Bureau and a set of rules that are designed to protect consumers from predatory practices. There's a Truth in Lending Act for consumers if you want to get a consumer loan or a mortgage loan. If you're a small business, we just let you go to the wolves. There's no Truth in Lending Act for small businesses. If you want to compare 2 different loans, banks and other lenders are not required to present those in comparable ways. And you have people taken advantage of all the time in the marketplace. I think it's a real strong issue. Joyce Klein, our host today, and many others came together to start a responsible small business lending coalition to try and fight these bad practices. And I think it's absolutely critical that we reform our federal laws in this area, or more small businesses are going to get hurt. And we need them to be able to grow. We need them to have a vibrant economy. We make it so much harder for small businesses by not having those kinds of protections.
I absolutely agree. I'm going to switch over. We have less than 10 minutes left, so I'm going to switch over and ask a couple of real policy questions that have come in from people. One person wrote in to ask from a new CDFI. They're looking to understand the ideal product that could help entrepreneurs, specifically entrepreneurs of color. Is there anything that you find particularly works well? And I think that's a question for all 3 of you. If you want to start, Nicole, what helped you most? And then I will turn to the quote experts.
In terms of the ideal product, you know, having a CDFI that is looking at the whole package, if you will, as a person, as a business rather, and you know, looking at what their plan looks like, you know, what their history looks like, how are they, you know, what work have they done either with that CDFI or other programs, and you know, experience acquired, if you will, around their own business and running and managing that business. In addition to the other financial, you know, things that you have to look at, but not basing it solely on it's a credit driven, it's, you know, finance, you know, heavy finance driven. You know, how does that underwriting take into account the I'm going to say the softer aspects, if you will, versus the hard and fast numbers, and being able to tie those together to create a package that someone can then access from as far as a loan, and then use that to thrive, and then have money that is not just, you know, kind of covering the current spread, but allows you to, you know, plan and execute on a strategy that allows you to grow. So funding that is also enough to not just get by, but also to really, you know, more realistically grow your business.
Okay. Bill, do you have thoughts on that?
No, I think it builds on what Nicole said. You really have to meet an entrepreneur where they are. You know, 60% of the members of our credit union either didn't have a bank account or were relying on petty lenders before they joined our credit union. So they were outside the banking system looking in. And so when that's the case, they're not going to be your traditional a credit. And so you've got to sit down and understand how they manage the resources they've had. You know, and tens of millions of Americans are credit invisible. They don't have a formal credit score. And so you've got to use non-traditional sources to underwrite that credit and understand how they manage. Is it the utility bills? Is it the mobile phone payments? And build a way to understand how they manage their resources and go from there. Quite honestly, there are just too many, you cannot approach them in a traditional way. And so I think that's what CDFIs do so well. They develop a relationship with the entrepreneur, and particularly with small mom and pop entrepreneurs. You cannot disconnect the personal balance sheet from the business balance sheet. They are one and the same. And so you've got to understand that. And hopefully as they grow and become more stronger, they'll start to be able to provide traditional financial statements, and you can help them grow and become stronger in how they manage their business. But it is you've got to meet the entrepreneur where they are. And unfortunately, in many communities of color, you're not going to find as many if you will, credits.
Okay, Michael, do you have any thoughts on this?
Just a quick point to add that in the current crisis, in the COVID-19 crisis, there's a totally new additional level of all these businesses being required really to shut down because of the global health crisis. And for that particular moment in time, we really need grants. And only the government can step in and do that.
And do you feel there's any movement for that to happen? What are you seeing out there on the ground right now?
I think there's opportunity. I mean, right now the government, the Congress, and the administration are trying to negotiate a fourth relief bill. And I think it's really critical for there to be relief focused on minority businesses and CDFIs in that bill. There needs to be a program that the Treasury Department and the Fed can run to provide liquidity to CDFIs. There needs to be emergency capital put into CDFIs. There needs to be massive expansion of the CDFI fund grant program, for example. And all these things can happen in this next bill if we have the political will. We know that CDFIs can execute on it and get the distribution mechanism going. We really need to see action on this in this next measure, or we're going to see continued a collapse of small businesses around the country.
Is there anyone in the Senate or the House that you feel is really focused in on this issue? Is there any potential legislation out there?
There are quite a number of, just to focus on the Senate side for a moment, Senator Warner, Senator Booker, Senator Coons are all very active in trying to make progress in this area. There are many others.
What are they trying to do? What is, if you could be, in 1 minute or less, if you could give a little bit about the legislation that is out there, specifics?
Well, the senators are trying to get CDFI-focused money into this legislation to support minority-owned and other small businesses in economically distressed communities around the country through the three mechanisms I said: a Federal Reserve Treasury program for liquidity for CDFIs, emergency funding for CDFIs for their capital base, and grants to the CDFI fund. Okay. To help them bolster CDFIs in this critical time.
Okay, and really one last question. Oh, go ahead.
Yeah, the Jobs and Improved Neighborhood Investment Act, that's the Warner Booker bill. It's got bipartisan support. Several Republicans have signed on to that, which is amazing these days, that there's actually bipartisan support for some of the largest investment in the history of the CDFI sector. And importantly, it targets investments in places that and need it most. As you said, minority communities, there's priority on minority-led CDFIs that are uncapitalized relative to their peers. And so there's some encouraging movement. Congress needs to back and get behind the Jobs and Neighborhood Investment Act.
Okay, you just took my question. I was going to ask you, what specific legislation do you like the most out there? Okay, it is 3:01. And I think I need to wrap this up. So
Helene, this is Joyce. I'm actually going to jump in if that's okay, because I have a few logistical things, but thank you. You're absolutely right. It's time to wrap up. So thank you. Thank you. And thanks to everyone on our panel for taking the time to be with us today and to share your perspectives. This was a great conversation. I know we could have gone on much longer. So we have a lot of food for thought right now. I do want to share just highlight a few things that I think I would note. One is that, you know, I think all of our panelists really made the case that if you start a relief program that runs through the banks and the SBA, which have always struggled or not served entrepreneurs of color, that relief program is not going to reach the folks we're talking about today. And so we really need a delivery system, which is CDFIs, that can reach them. And we have done some writing about this. When you close out of this webinar, you'll get directed to a blog post that Bill and I wrote together along with Tim Ogden of the Financial Access Initiative that talks about some of these concepts, funding the CDFI fund, what the Federal Reserve could do to provide liquidity. So that's all important, and direct you to that. So just in terms of wrapping up, I want to thank my Aspen Institute colleagues who do such a fabulous job of organizing and supporting these events. Want to thank all of you in our audience for joining us and sharing your questions and comments. Please keep an eye out for our next Opportunity American event, which is going to be later this month. Please take a moment to respond to our quick feedback survey at the close of the webinar, or send us an email at eop.aspeninstitute.org and let us know what you think. We'd love to hear from you and get your feedback. And keep an eye out, we will be sending out the recording to the event, hopefully a little bit later today, but if not tomorrow. So thanks again, everyone. Thanks to our panelists. Have a great day.
Okay, thank you.
Thank you so much.
Thank you.
And especially thank you to Nicole, who took time from trying to save her business to spend an hour with us. You are the most important person here. I just want you to know that.
Hear, hear.
Thank you. It was a worthwhile discussion.
Okay.
Take care.